Time now for an in-depth look at the market news this afternoon, and for that, I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you for making time today.
Thank you for having me today.
A lot of uncertainty among investors on Wall Street right now because of the pandemic and the holdup on the stimulus bill in Washington. Overnight, the Nasdaq took a breather, but the Dow and the S&P were both up for a 7th straight session. What's the story in the global markets?
Yes, as you said, U.S. markets were kind of mixed. If you look at Dow Jones, it was up 1.3%, while the S&P gained about 0.3%. In the contrast, the Nasdaq lost about 0.4%. This type of movements were actually happening since last Friday, where the Nasdaq was taking some breather for the last 2 days. And some of the people are saying that maybe there is a switch in terms of the net buying for sectors, where they're selling the major big tech companies while buying some of the cyclicals that are positioned in the Dow index as well as S&P 500. Clearly, that is because of the possible economic recoveries that might be happening. If you look at the change in the dollar index trend, we saw some of the movement where the dollars were strengthening. Also, the 10 years government bond rates were rising from falling to the lowest of 0.5% level to now about 0.59%. So clearly, there might be some changes in terms of the sentiment and the movement in terms of the sectors, in terms of the rising trend. All that depends on how quickly the economic recovery will happen. Donald Trump signed executive orders extending the COVID-19 aid, such as extending unemployment benefits and deferring the student loan payments. But in terms of whether they really passing the Congress, it might take some time. So clearly there's issues whether the economic recovery will happen in full scales going into the fourth quarter this year or not, or whether it might be taking some slower pace. In terms of, however, the market movement, it seems that people are assuming that the economic recovery is happening and that equity market in general are showing quite strong rising trend so far.
Well, Korean stocks had another big gain today. The KOSPI now well over the 2,400 mark, 6 sessions in a row in the green. What do you make of the market right now?
Right. If you look at the KOSPI, it was up 1.35%, hitting above 2,400 territories, while the Nasdaq is taking some breather continuously in the last 2 days. It is at around 860, falling by about 0.3%. Clearly, the same type of movement is happening for Korean market as it happened to U.S., where the Korea's biggest, strongest movement sector was the Nasdaq, where Nasdaq index was the one of the strongest or the highest level of rise from its bottom since the COVID-19 incident amongst all the countries in the world. And because of that, it is taking some breathers, and while doing that, you see the KOSPI rising quite rapidly, showing a quite significant rise today as well as yesterday. In terms of the valuation-wise, we think that the Nasdaq seems to be a bit stretching in terms of the valuation, while the KOSPI looks quite attractive still, despite the strong movement that we saw last 2 days. We are seeing some of the movements where the COVID-19 beneficiary sectors such as on tech businesses or the bio businesses, those sectors were taking some breathers, while the automobile sector as well as petrochemicals or the renewable energy sectors were showing very strong movement in terms of share price. Also, some of the banking stocks are doing quite well due to the high dividend yield. So we are seeing some switching as well in Korea. Most of that movement is based on valuation, and we think that if that valuation is meaningful thing, then KOSPI has some more room to go up based on our residual income model. Fair price of the KOSPI is around 2,600 level, whereas the Nasdaq's fair value is about 890 level. So we are seeing much bigger room for KOSPI to move going into the future.
Well, now, Mr. Yu, with so much uncertainty out there right now, gold is reaching new highs, a dip in the past couple of days, but still solidly above $2,000 an ounce. What's your outlook for gold?
Yes, really, when we look at gold, what we look at is the M1 growth rate of U.S. If you are seeing heavy amount of money printing and huge amount of the liquidity injection and M1 growth rate and M4 growth rate, we think that that affects the gold prices to move up higher because the value of currency goes down while the gold value goes up. Clearly, right now, we are seeing continuation of a huge increase in the M1 growth rate. We see that number hitting around 38% YOY, which is record highest level that we've never seen in the past. So because of that, we think that the gold price will continue to show rising trend. However, as you said, because of such a strong movement that we saw in the last 1 month or so, reaching well above $2,000 level, we are seeing some correction right now. As of now, the gold is fallen below 2,000 level. However, because of continuation of liquidity condition, we think that this is a good opportunity for investor to buy gold with some correction that we've seen the last 2 days. We think that the gold's probably peak price will be much higher than $2,500 to ounce in the future because in the past, the M1 growth rate affects quite significantly to the price of gold, and such current level of huge injection of liquidity, we think that there has more room for gold to go up in the future.
Got it. All right, Mr. Yu, thanks so much for sharing your insights today. Appreciate it as always.
Thank you very much.